हाय गाइस, वेलकम बैक टू अवर यूट्यूब चैनल फिनसाइट। और आज हम बात करेंगे इस सेशन में वैल्यू क्रिएशन के बारे में। दिस इज कॉल्ड ए वैल्यू ऑप्टिमाइजेशन एंड द अदर कॉन्सेप्ट इज फाइनेंशियल री इंजीनियरिंग और फाइनेंशियल इंजीनियरिंग। सो आज के कॉन्सेप्ट में हम ये दो पॉइंट्स पे डिस्कस करेंगे विच इज वेरी इंपॉर्टेंट इन प्राइवेट इक्विटी फर्म टू मेक ए रिटर्न, टू मेक ए एग्जिट। सो चलिए, बिना टाइम खराब करे हम शुरू करते हैं इसका सेशन। तो चलिए हमारी स्लाइड्स पे चलते हैं आज की। तो एज यू कैन सी ऑन माय स्क्रीन राइट नाउ। सो one second. Yeah. So typically we are talking about the leverage buyout firms, and there are two major ways these firms obtain their returns on the investment. One is financial engineering, second is value creation. That is nothing but the optimization of. So financial engineering basically a optimization of cost of capital, cost of capital of company, COC. Why? So you will see the LBOs are mostly are financed through debt funding. Okay. So financial engineering is all about the optimization of companies' cost of capital to make a deal better, while value creation is all about trimming the fat from the companies in terms of operation. What does it mean by trimming the fat? It simply means whenever the investment happens while we are expecting a return, there are certain expenses that would be capex, opex, and the other one is debt payments, right? Since it's a debt fund, debt finance, right? LBOs. So in such a case, what we need to do, this is the cash or money is the oxygen in P funds. So the OpEx you are supposed to minimize so that you have a sufficient fund, sufficient money to invest back or to get a more return or to repayment of your debt payments, which is according to the master plan that you have set up at the initial stage of fund creation, that is 4 to 5 years of master plan. So this is the one thing, that is financial engineering is all about the optimization of cost of capital, because cost of capital has a two component, that is the equity component, one is the debt component. Since the significant uh, funding is being through a debt fund, then it's very important that we have an optimized cost of capital. And in some of the sessions, we will be looking while we will exploring the valuation thing, that how it impacts our entire value of a business, this cost of capital. But the second thing is optimization of companies' cost of capital in terms of trimming the fat from the companies, which is mostly the operations. Capex is for the future growth of the private equity fund. That is something which we might not specifically trim down. But there is a second thing, that is a OPEX, operating expenses. That is a something where we are supposed to put our emphasis and need to trim that fat so that we can have a significant amount, good amount to pay our debt and keep on a track. All right, so let's go to the second slide, which is talking about the. To obtain the return, PE firm usually needs to get into a company, create as much as value as possible, and get out. So PE का object we have already studied, which is nothing. Master plan, 4 to 5 years, flip the company, and make an exit, right? Profitable exit. So this is the master plan for this. This is the blueprint, or I can say master plan. Usually set it for the 4 to 5 key initiatives. Here's the term key initiatives that will create a value for 4 to 5 years. And this, understand one thing, PE funds not focus, not focus on the quarterly value creation, like like the public companies. So 4 to 5 years में उनको फ्लिप करना होता है, कंपनी को प्रॉफिट बनाना होता है और एग्जिट करना होता है. तो क्वार्टरली उनका क्या वैल्यू चल रहा है, दैट इज नॉट द देयर कंसर्न. तो ये समझना होगा. In order to make this plan happen, P firm possibly together with the company's management, कंपनी का जो मैनेजमेंट है, along with general managers, and buy the company debt for better deals. So financial reengineering में there is one more issue is that not ended up on junk bonds. Junk bonds, highly leveraged firms. So these are the highly leveraged since these are the LBOs. LBOs are highly leveraged. Okay. So the concept is simply higher the risk, higher the return. Thereafter, company usually needs money for three things: operating expense, as I told you, capex and debt. And one that can be managed is in short term. Short term goal में क्या manage कर सकते हो आप? OPEX. And the focus, this is the focus of the PE firm. So PE firm का वो focus होता है trimming the fat in the operating expenses and saving the more monies from the operating expenses so that you can in the plan that you have set up it for the 4 to 5 years to flip the company, it goes smoothly, and you can have a sufficient amount to pay your debt because these are the leverage funds. If you are not able to make your commitment payments on the time, especially in debt, then anyhow you are supposed to make an exit even in the losses because this is how the deals get it done. You do not mess up with the scheduled payments for the debt because it's the obligation on the companies. So remember that one point. And thereafter, the plan to create a value creation is simply minimizing OpEx, usually done it by ruthlessly optimizing the companies, trimming the fat. It may involve things like restructuring. Company can do restructuring, selling off, spin-off business lines, may have change business line. Okay, business line like nothing like maybe you are dealing uh, tech company now convert into finance company. Entirely business unit can be sold off, killing the business lines like uh, product line, removing which is not profitable. ठीक है, not profitable, and doubling down the successful one. The things those working will double. Placing people in the right place, giving them an incentive tied to success of the companies. That is called also known as phantom equity. सही है, सही लोगों को सही कंपनी में सही टाइम पे रखना is also a good thing. That's why you are supposed to incentivize the people who are working for the companies. Unlike the public companies, the stress of the private equity fund, all the stages of the funding, from investing and managing the fund, all the people who are involved must be the right people, must be the qualified and having the sound technical knowledge and everything so that they can smoothly run the business and can make a company successful 4 to 5 years. That is why this is also very important. Usually the actually it is determined degree when sourcing the opportunity, so it's also determined on the sourcing stage. हमने 3 स्टेज पढ़ी थी. 3 स्टेजेस में से एक है सोर्सिंग स्टेज. फर्स्ट स्टेज, वी विल कंसिडर ओनली बाइंग द कंपनी इफ दे. सो जो आईबीज जो हमको सेल ऑफर करते हैं उनमें से पी फंड जो यूजुअली उन्हीं पे स्ट्रेस करता है which they think they can flip those companies in next 4 to 5 years and make a profit. मतलब they are also, I mean, this here goes the due diligence. ओके, ड्यू डिलिजेंस करके ही आप सोर्सिंग स्टेज पे ही आपको वही कंपनियों में इन्वेस्ट करना है, सेलेक्ट करना है प्राइवेट इक्विटी के लिए जिनको आप एग्जैक्टली यू कैन टर्न अराउंड देम एज अ प्रॉफिटेबल सेगमेंट, प्रॉफिटेबल कंपनीज एंड मेक एग्जिट. I think that is all for today in the financial engineering and value creation. And thanks for liking the video. If you really like the content, please do like, share, and subscribe. Okay, bye bye. And please follow me on on LinkedIn, where with my name C Ashutosh Yogi, where you can follow the more premium quality of finance content and keep following me. Thank you. Bye bye.